the alarming ascent. What the debt clock really shows. Every second, we add billions to a number that fewer and fewer people truly understand. A number so large, so abstract, that it no longer feels real. Yet it governs everything. The food we eat, the homes we buy, the futures we dream of. This number is the world's debt, and it never stops growing. Across screens in New York, London, Tokyo, and Beijing, red digits flicker and spin. They belong to the global debt clock, a tool that doesn't measure time, but obligation. It counts the combined debts of governments, corporations, and households. Trillions of promises stacked on top of each other, ticking upward without pause. It began as a way to visualize something invisible, the vast web of loans and liabilities that binds modern economies together. But as the numbers accelerated, what was meant as a warning became a monument to excess. The clock doesn't lie. It shows that every country, rich or poor, is borrowing more than it earns, spending more than it saves, and relying on tomorrow to pay for today. Imagine this. If you stacked $1 trillion bills, they would stretch from the Earth to the Moon and back 250 times. Now multiply that by hundreds. That's the scale of our collective debt, an ocean so deep that even economists struggle to comprehend its true weight. The global debt clock doesn't judge or moralize. It simply reveals. It reveals that our progress, our comfort, and even our stability depend on an ever-rising tide of borrowed money. And while the digits glow brighter, one uncomfortable question grows louder. How long can this continue before the system itself begins to break? The numbers rise, the seconds pass, and beneath the ticking glow of the debt clock lies a truth too large to ignore. Our entire civilization is built on a promise that must one day be paid. Section 2. The Roots of the Debt Spiral. How we got here. Debt wasn't always a monster. In the beginning, it was a tool, a bridge between what we wanted and what we could afford. Ancient civilizations used it to build roads, temples, and empires. Kings borrowed to fund wars. Farmers borrowed to plant seeds. Debt was a way to borrow from the future, with the belief that tomorrow would be richer than today. But somewhere along the way, that belief turned into dependency. As economies grew, so did ambition. Governments learned that debt could buy not just prosperity, but popularity. Lower taxes, higher spending, all financed by invisible money printed in the name of progress. The result was a system that rewarded short-term gain and ignored long-term cost. The modern debt spiral began after the Second World War. To rebuild shattered nations, governments borrowed at historic levels. It worked for a while. Factories roared back to life, new industries emerged, and global trade flourished. The world discovered something dangerous. Debt could create the illusion of endless growth. Then came the 1970s, the decade that changed everything. When the United States abandoned the gold standard, money was no longer tied to anything real. It became faith-based, printed, loaned, and multiplied by digital promises. Central banks could create money with a few keystrokes, and nations could borrow without limit. The debt clock began ticking faster.
Corporations followed suit, realizing they too could borrow to expand faster than ever. Leverage became strategy, risk became routine. The line between wealth and debt blurred. Even ordinary families joined in, borrowing for homes, cars, education, and dreams that felt just within reach. But the system had a flaw. Every dollar of debt demanded interest. every loan created a need for even more money to pay it back. So we borrowed again and again and again, until growth itself depended on borrowing. The machine could never stop, because stopping meant collapse. And so the world entered a quiet pact. Keep the debt growing. Keep the illusion alive. Politicians avoided hard truths. Economists invented new theories to justify the old habits. And ordinary people went about their lives, unaware that the ground beneath them was being built on borrowed time. This is how we arrived here, in a world where the clock never stops ticking and the number never stops rising. A world built on promises we may never be able to keep. Section 3. The sheer scale. Numbers beyond comprehension. It's easy to see the global debt clock and shrug. Big numbers feel abstract. Trillions sound like someone else's problem. But let's make it real. Imagine a single dollar bill. Now, stack 1 trillion of them. That stack would rise beyond the clouds, soar past satellites, and reach the moon and back 250 times. And that's just the government debt of one country. Now, multiply that by the debts of every nation, corporation, and household. The sum is almost unimaginable. Or consider time. Every second, the world adds tens of thousands of dollars to this mountain of debt. In 1 minute, that's millions. In 1 hour, billions. By the time you finish watching this video, the total will have increased by more than your lifetime earnings, likely by more than your parents or even grandparents ever earned. The human mind struggles with numbers this large. We evolved to count apples, not quadrillions. Yet these numbers shape our reality. They determine the cost of borrowing, the stability of currencies, and the security of pensions. Every point on that clock represents a promise someone made to pay back, to sustain, to survive. And somewhere, a tiny miscalculation could trigger a cascade of consequences. The sheer scale of global debt is not just a financial problem, it's a psychological one. We cannot truly grasp it, and that inability makes us complacent. When debt becomes invisible, it becomes permanent. And the debt clock keeps spinning, a relentless reminder of a world borrowing from its own future. Every digit is a story, a decision, a risk. Behind the trillions are governments borrowing to fund wars, corporations leveraging to expand, families taking out mortgages, and individuals financing dreams. Each debt alone might seem reasonable. Together, they form a mountain that could crush the unwary. The question is not whether debt is dangerous. Debt has always been part of civilization. The question is whether the pace and scale at which we are accumulating it is sustainable. At current speed, the debt clock is less a warning and more a countdown. And yet most of us continue living as if it doesn't exist, distracted by daily life, stock prices, and political debates. The clock doesn't stop, and neither does the world's appetite for borrowing. Section 4. Historical Reckoning. When did we go so far? To understand why the global debt clock spins so wildly, we need to step back and look at history. Debt is not new, but the scale and speed are unprecedented. After World War II, the world faced a shattered economy. Cities were in ruins, banks were empty, and nations needed a way to rebuild. The Bretton Woods system, established in 1944, created a framework for global financial stability. It tied currencies to the US dollar, which itself was backed by gold. For decades, this system encouraged trade, investment, and reconstruction. But it also laid the foundation for easier borrowing. The real turning point came in 1971 when the US abandoned the gold standard. Fiat money, currency backed by trust rather than a physical commodity, became the norm. Suddenly, Governments could issue more money than they physically possessed. Borrowing became simpler, almost limitless, and the appetite for debt, once cautious and measured, began to escalate.
Major global events accelerated this trend. The 2008 financial crisis pushed governments to borrow in staggering amounts to bail out banks, stimulate economies, and avoid total collapse. Trillions of dollars of debt were added in a matter of months. Then came the COVID-19 pandemic. Entire economies shut down, healthcare systems stretched to the brink, and governments injected trillions more to support citizens and businesses. In less than 2 years, the global debt clock jumped by a shocking percentage. Underlying these spikes are structural choices. Social programs, infrastructure projects, military expenditures, and the pursuit of continuous growth have all contributed. Each decision, rational in isolation, compounds over time. The result is a mountain of debt that now casts a shadow over our entire global economy. History shows us that debt grows in cycles: boom, bust, borrowing, and reset. But today, the cycles are longer, the sums larger, and the safety nets thinner. We are accumulating debt faster than ever, and the clock shows no sign of slowing. The lesson is clear. Modern debt is a product of history, policy, and human ambition. But history also warns us, when debt outpaces growth, when obligations exceed ability to pay, the consequences can be severe. And today, we are closer to that point than most realize. Section 5. The price of profligacy. Who pays and how? Debt is not just a number on a screen. It has real consequences, and someone always pays the price. Often, it is not those who borrowed recklessly, but the wider population and future generations. One of the most immediate effects is inflation. When governments borrow excessively, they often finance that debt by printing more money. More money chasing the same amount of goods reduces purchasing power. Prices rise, savings erode, and ordinary people feel the pinch in their daily lives, from grocery bills to rent and fuel. Then there is the intergenerational burden. Every dollar borrowed today may represent a tax or an obligation that children and grandchildren will inherit. Public services, infrastructure projects, and even social safety nets can be constrained by the weight of this debt. Future citizens are left with fewer options and more limitations, often without any say in the borrowing decisions made decades earlier. Sovereign risk is another hidden cost. Nations with high debt face the constant threat of credit downgrades. Borrowing costs increase. Interest payments consume larger shares of national budgets, and governments may struggle to fund essential programs. Social unrest can emerge when citizens realize their taxes are being redirected to service debt rather than improve their quality of life. Heavy debt also limits geopolitical flexibility. Countries burdened with liabilities have less room to maneuver in times of crisis. Wars, natural disasters, or economic shocks become harder to manage when every dollar of borrowing brings added scrutiny and higher risk. Debt, in short, is not free. It is a transfer of risk, cost, and obligation, often invisible until it manifests as inflation, instability, or economic stagnation. And yet, the global debt clock continues its relentless march upward, ticking away seconds that pile up into trillions, a silent reminder of the price of profligacy. Humanity has always wrestled with this question: how much debt is sustainable? Today, we are testing limits that no prior generation has faced. The clock does not lie, and the costs are already being felt.
The tipping points are uncertain, but the threats are real. A sudden spike in interest rates could make debt servicing impossible for both governments and corporations. A geopolitical shock, war, trade collapse, or energy crisis could strain finances beyond repair. And a loss of faith in a nation's ability to honor its obligations could trigger a global cascade where confidence evaporates and the debt clock stops being a number and starts being a crisis. Even more troubling is the psychological dimension. When individuals, corporations, and nations all believe debt is manageable, risky behaviors continue unchecked. Borrowing becomes normalized, speculation accelerates, and the illusion of stability masks growing fragility. The clock keeps ticking, louder with every second, reminding us that time is not on our side. The sustainability of modern society, therefore, is not guaranteed. The rapid ascent of global debt challenges the assumption that we can indefinitely consume, borrow, and spend without consequences. We may have built an empire on numbers, but numbers alone cannot sustain trust, prosperity, or social cohesion indefinitely. Section 7. The Unwritten Future, Pathways and Perils. So, what comes next? The future of global debt is unwritten, but the paths are limited and fraught with risk. Economists and policymakers debate the options, each carrying profound consequences. One approach is austerity, cutting spending to reduce debt. It can stabilize finances, but often at human cost, reduced social services, unemployment, and social unrest. Another option is default, a painful reset where obligations are partially or wholly forgiven. This can relieve immediate pressure, but destroys trust, shakes financial markets, and can trigger global contagion. Controlled inflation is yet another strategy, deliberately devaluing currency to make debt easier to repay. But this erodes savings and purchasing power, hitting everyday citizens the hardest. Technology presents a potential wildcard. Artificial intelligence, automation, and blockchain could revolutionize productivity, creating new wealth and efficiency. Yet they could also exacerbate inequality and concentrate wealth further, leaving debt burdens heavier on those without access to these innovations. The future may hold solutions unimaginable today, or it may amplify the fragility already visible on the global debt clock. As we stare at the numbers ticking ever higher, the question becomes unavoidable. Is modern society, built on the shifting sands of ever-increasing debt, truly sustainable? Or are we hurtling toward an inevitable, painful reset, a reckoning that history has repeatedly warned us about? This is not a distant problem. It touches governments, corporations, families, and individuals alike. Every policy choice, every borrowed dollar, every unchecked expansion adds to the sum that will one day demand payment. And yet the clock keeps ticking, indifferent to our hope or denial. The global debt clock is more than a number. It is a mirror. It reflects not just financial realities, but human choices, priorities, and trust. It forces us to confront uncomfortable truths, that the pursuit of endless growth comes at a cost, that present comfort may mortgage the future, and that stability is never permanent. What will we choose? Will we innovate, adapt, and create systems resilient enough to endure? Or will we continue to rely on borrowed time, postponing the reckoning while the numbers climb ever higher? The answer is not predetermined. It will be written in our decisions, our policies, and our willingness to face the reality behind the numbers. And as viewers, thinkers, and participants in this global economy, your voice matters. Share your perspective, debate the solutions, and confront the clock with awareness. Because one thing is certain, time is moving, debt is rising, and the story of modern society is still being written. The question remains, will it end in balance, collapse, or reinvention?